It's the first week of January 2026. Margaret, a 72-year-old widow in Ohio, pours her morning coffee and sits down to check her bank account. She has been waiting for this deposit all month. The news said Social Security beneficiaries would receive a 2.8% raise this year. She did the math. She was expecting an extra $56. But when the deposit hits, something is wrong. The number is barely higher than last month. In some cases, for her neighbor down the street, it's actually lower. Margaret feels her stomach drop. Did Social Security make a mistake? Did someone steal her benefits? Why is the raise she was promised not really there? Friend, if you are watching this video right now, I want you to listen very carefully, because what happened to Margaret is happening to millions of seniors across America this month, and most of them have no idea why. Hello, my friend. I am Edward. I have spent years as a senior policy analyst, helping retirees just like you understand the rules that protect or quietly drain your retirement income. Today, I'm going to show you the exact reason your January Social Security check looks smaller than you expected. I'm going to walk you through the official numbers from Social Security and Medicare.gov, and I'm going to give you a simple 3-step action plan to make sure you don't lose another dollar you don't have to lose. But please, stay with me until the very end of this video, because there is one hidden mistake that thousands of seniors are making right now. It's a mistake that can cost you up to $5,000 a year in extra Medicare charges. And the worst part? Most people don't even know they're making it until the bill arrives. So pour yourself a cup of coffee, sit comfortably, and let's protect what you've earned. Let me tell you about Robert. Robert is 67 years old. He retired from a manufacturing job in Pennsylvania 2 years ago. He's careful with his money. He pays his bills on time. He even reads the Medicare handbook every year, which, I have to tell you, puts him ahead of about 90% of retirees. In 2024, Robert did something that seemed perfectly responsible. He sold the small rental property he and his late wife had owned for 30 years. The sale brought in about $80,000 in capital gains. He used some of that money to pay off his mortgage and put the rest into safe savings. He thought he had done everything right. Then, in November of 2025, Robert received a letter from the Social Security Administration. The letter was titled Initial IRMAA Determination Notice. Robert had never heard that word before, IRMAA. The letter said that starting in January 2026, his Medicare Part B premium would not be the standard amount of $202.90. Instead, because of his 2024 income, Robert would now pay $405.80 every month. That's an extra $2,435 per year, coming directly out of his Social Security check. Robert called me, panicked. He said, "Edward, I'm not rich. That was a one-time sale. Why am I being punished in 2026 for something I did 2 years ago?" And here is the painful truth I had to tell him. Robert hadn't done anything wrong. He had just fallen into what I call the 2-year trap. And he had no idea that the law gave him a way to fight back, a specific government form that could have lowered that surcharge significantly. He just didn't know it existed. By the time he called me, he had already lost months he could have used to file an appeal. I don't want that to happen to you. So let's break down exactly what's going on. Let's start with the facts. These are not opinions. These come straight from the official 2026 fact sheets from the Social Security Administration and Medicare.gov. Fact number 1. The 2026 cost of living adjustment is 2.8%. That sounds nice. For the average retired worker, it raises the monthly benefit from $2,015 to $2,071. That's about a $56 increase per month. Fact number 2. The standard Medicare Part B premium just jumped to $202.90 per month. In 2025, that premium was $185, So your Medicare Part B premium just went up by $17.90 every single month. Now do the math with me. $56 in raise minus $17.90 in higher Medicare premiums leaves you with about $38. So your real raise is closer to 1.5%, not the 2.8% you saw in the headlines. The Kaiser Family Foundation has confirmed this. Rising Part B premiums are quietly eating up a large portion of the COLA increase for millions of beneficiaries. Fact number 3, the Part B deductible also went up. In 2026, you now have to pay $283 out of pocket before Original Medicare even starts covering your medical services. That's $26 more than last year. Fact number 4, and this is where Robert got hurt, IRMAA. IRMAA stands for Income-Related Monthly Adjustment Amount. In simple English, if your income 2 years ago was above a certain level, Medicare charges you a higher Part B premium. Here is what most seniors don't realize. The 2026 surcharge is based on your 2024 tax return, not your current income, your income from 2 years ago. If you filed single and your 2024 income was $109,000 or less, or if you filed jointly and earned $218,000 or less, you pay the standard $202.90. But cross those lines even by $1, and the surcharges climb fast. The next bracket, $284.10 a month. The bracket after that, $405.80, then $527.50, then $649.20. And at the very top, for incomes above $500,000 single or $750,000 joint, $689.90 every single month for Part B alone. That's almost $500 more every month than the standard premium, nearly $6,000 a year just for Medicare. And remember, a one-time event in 2024 can push you into one of these brackets: selling a home, a Roth conversion, a large IRA withdrawal, an inheritance with capital gains. Any of these can trigger an IRMAA surcharge that hits you in 2026. Fact number 5, the hold harmless provision. There is a federal protection written into Section 1840 of the Social Security Act called hold harmless. For most retirees, this rule prevents your net Social Security check from being lower in 2026 than it was in 2025, even when Part B premiums rise. But here is the trap. Hold harmless does not protect everyone. It does not apply to people newly enrolled in Medicare. It does not apply to anyone subject to IRMAA. It does not apply to those who pay their Medicare premiums directly instead of having them deducted from Social Security. And it does not apply to dual eligible beneficiaries whose state Medicaid pays the premium. So if you fall into any of those groups, your January 2026 deposit can absolutely be smaller than your December 2025 deposit. And that is exactly what is shocking so many seniors right now. Now I want to give you 3 specific steps you can take this week to protect yourself. Please grab a pen and paper. Step 1. Verify your exact Part B premium and your IRMAA status. Log into your My Social Security account at SSA.gov. Look at your January 2026 benefit statement. It will show you the exact amount being deducted for Medicare Part B. If that number is higher than $202.90, you are paying an IRMAA surcharge, and you need to know why. If you don't have an online account, call Social Security directly at 1-800-772-1213. Step 2. If you had a life-changing event, file Form SSA-44. This is the form Robert didn't know about. Form SSA-44 lets you ask Social Security to lower or remove your IRMAA surcharge if you experienced a qualifying life event. Those events include marriage, divorce, the death of a spouse, work stoppage, work reduction, loss of pension income, loss of income-producing property, or an employer settlement payment. You can download Form SSA-44 directly from SSA.gov, fill it out, attach proof of the event, mail or bring it to your local Social Security office. Don't wait. These appeals have deadlines. Step 3. Check if you qualify for a Medicare savings program or extra help. If your income is on the lower end, your state may pay your Part B premium for you completely. The programs are called QMB, SLMB, and QI. The Qualified Medicare Beneficiary, Specified Low-Income Medicare Beneficiary, and Qualifying Individual Programs. There is also a program called Extra Help that lowers your Part D drug costs significantly. Many seniors who qualify never apply because they don't know these programs exist. Visit Medicare.gov or Benefits.gov to check your eligibility today. 3 steps: verify, appeal if you qualify, apply for assistance if you're eligible. That's it, but you have to take action. Nobody from the government is going to call you and remind you. Now listen to me carefully, my friend, because this is important. The rules I just shared with you today, the Part B premium, the IRMAA brackets, the hold harmless protection, the SSA 44 form, these are only a small piece of what is changing in 2026. New banking rules, new pension tax changes, new airport identification requirements for seniors, new Medicare Advantage rules that are pushing millions of retirees off their plans. These changes are coming fast, and most of them never make the evening news. Please do not rely only on YouTube notifications to keep you informed. YouTube changes its algorithm constantly, and you may miss the next critical alert. Click the link in the description below this video right now and join our SSA Global Senior Alerts official WhatsApp channel. When you join, you'll receive a free copy of our Senior Benefits Protection Guide, a step-by-step PDF covering Social Security, Medicare, pensions, banking rules, insurance claim protection, and travel regulations for seniors. You will also get real-time alerts the moment a new rule is announced, straight to your phone, no fees, no spam. If this video helped you understand the 2026 Medicare deduction, please give it a thumbs up. Leave a comment telling me your state and how much your January check changed. I read every single one. And share this video with one friend or family member who depends on Social Security. You may save them thousands of dollars and a great deal of worry. This is Edward. Stay informed, stay protected, and remember, the rules may change, but your right to understand them never does. I'll see you in the next video.